The second keynote speeches session is dedicated to regulations and challenges of AI integration in insurance sector. And we will have two keynote speeches, one delivered by the Commissioner Andrew Mais from Connecticut Insurance Department and immediate past president of the National Association of Insurance Commissioners, the NIC. And the second will be given by Petra Hirkema, who is chairperson of European Insurance and Occupational Pensions Authority in Europe. So, Commissioner Mais, the floor is yours.
Thank you so much. I'm going to have to wait till we're done. Thank you all so much. Before I do begin, though, I'd like to express my sincere gratitude to the FMA for inviting me to this extraordinary event held under the high patronage of His Majesty King Mohammed VI. It is truly an honor to be here. Now, as mentioned today, I will be discussing the U.S. perspective on the regulatory challenges of artificial intelligence integration in the insurance sector. It's a tough topic to cover in 20 minutes, which is all they told me I have, but I will try to do my best. We've heard, and we will continue to hear throughout this conference, that the insurance industry is rapidly evolving in its use of advanced data analytics, artificial intelligence, and its increased reliance on third-party models. And these technologies, make no mistake, they offer tremendous benefits that were unimaginable just a few years ago. But they also present new regulatory challenges that our existing frameworks may not fully address. Anybody who's read Spider-Man comics knows that with great power comes great responsibility. These are very powerful tools. And we, as regulators, have a responsibility to ensure that consumers are protected as we allow the use of these tools to foster innovation. So what I'd like to do today is to give you an overview of what's happening in the United States to better understand the technology, the use, and how we as regulators want to regulate it in that way that protects consumers and encourages responsible innovation. And what I like to do before international audiences, the US has a different regulatory structure than most, so I'd like to start with a brief explanation of the structure of insurance regulation in the United States, because I think it will help explain how we in the US have approached artificial intelligence. In the United States, insurance regulation is state-based. Each individual state, such as Connecticut, where I am based, and I serve as insurance commissioner, or Idaho or Ohio, my colleagues who are both directors there, the chief insurance regulators there, and who you will hear from later, each of us has our own regulatory structure tailored to our individual, unique insurance market. Now, we're supported in this work by the National Association of Insurance Commissioners. It's existed for more than 150 years. And the goal of the NAIC is owned by the 56 chief insurance regulators, 50 states, District of Columbia, and 5 territories. And its goal is to create consistency, to create a national system of state-based regulation, to help US regulators harmonize best efforts, coordinate across state lines, and for the good of the industry and of consumers, maintain consistent regulatory frameworks. It also oversees our accreditation program, and that's a peer review process that ensures that every state insurance department meets baseline standard, particularly when it comes to financial solvency regulation of multi-state insurers. We need to be able to trust each other, and accreditation is the way we do it. And what that means is, while there are differences among states, which is the design of the federalist system, the backbone of insurance regulation, financial solvency, oversight, and consumer protection, that remains consistent across the country. The NAIC also coordinates our international engagement bilaterally and through organizations like the IAIS and the OECD. And now that I've given you the basic primer on U.S. state insurance regulation, I'm going to move on to how we've approached AI and the regulatory space. Now, back in 2019, which is pretty much a lifetime ago in AI time, we at the NAIC established the Big Data and Artificial Intelligence Working Group. And that group eventually evolved into a broader Technology and Innovation Committee, which is charged with studying the development and use of AI in insurance and assessing its implications for consumer protection, for market conduct, and for our regulatory frameworks. One major result of this work was the adoption of AI regulatory principles by the full NAIC membership, and that was a little over 4 years ago at our 2020 summer national meetings. These principles they didn't spring out of thin air. They were based on the OECD's AI principles, and they outlined a framework for how we as U.S. insurance regulators believe AI should be used in our industry. The framework, and I'm just going to briefly go over this, it's built, the acronym is FACTS. F, fair and ethical. All actors should respect the rule of law throughout the AI lifecycle, including insurance laws and regulations such as those relating to trade practices, unfair discrimination, access to insurance, underwriting, and privacy, among others. And AI systems should not be designed to harm or deceive people and should be implemented in a manner that avoids harmful or unintended consequences. And since we know with innovation comes the possibility of mistakes, these systems must be designed to correct and remediate for any such consequences when they occur. AI actors should be accountable, that's the aim. They have to make sure that AI systems operate in compliance with these principles, consistent with the actors' roles and within the appropriate context and the evolving technologies. C is pretty basic, at least to me, it's compliant. If you're using AI, all actors have to have the knowledge and the resources in place to comply with all applicable state laws and regulations, since insurance is primarily regulated by the individual states, as I mentioned. So you have to comply with the laws in each jurisdiction. And that is a reflection of the fact that AI, to us, is a tool. It's a wonderful tool, and the potential is there. But it is a tool that has to be used, that has to be managed properly for consumer protection. And as was mentioned earlier, insurance is a business of trust, which is why the T is for transparent. For the purposes of improving the public's confidence in AI actors should commit to transparency and responsible disclosures regarding AI systems to relevant stakeholders. And AI actors must have the ability, and this is where we get to security, to protect the confidentiality of their proprietary algorithms, which gives us the last one in facts, and that's an S, safe, secure, and robust. AI systems should be robust, secure, and safe throughout the entire life cycle so that in conditions of normal or reasonably foreseeable use, or in adverse conditions, they can function, as we said, in compliance with applicable laws and regulations. And taken together, I mean, this is not rocket science, basically. It may lead to rocket science, but what we're saying is that these principles make it clear that simply because a tool is new does not mean it's exempt from existing law that's meant to protect consumers. So we came out with that in 2020, and then in 2023, we followed up with another milestone, the NAIC Model Bulletin, the use of artificial intelligence systems by insurers. Now, this was based on the vision of the AI principles and reminded insurers that all existing consumer protections still applied, and outlined what regulators expect from responsible users of AI, especially in terms of governance, which is a matter of great importance, risk management and internal controls, and third-party AI systems. As state insurance regulators, we believe in the importance from us of transparency. We believe in ensuring that the regulated entities have the ability to understand, to rely on what we say, and thus the ability to proceed and to create new products. And this principles-based bulletin, the use of artificial intelligence systems by insurers, was designed to provide insurers with that benchmark. They knew what to do. We weren't going to be prescriptive. You know what we're looking for. Now, it's pretty straightforward. Go out and follow the rules that we've set up. And now, in the more than 3 years between the original principles in 2020 and the bulletin, significant concerns arose in AI about both the accuracy of data, garbage in, garbage out. That's the way it is. You got to make sure the data that you're getting is good, that it's clean, that it's accurate, that it's complete, and the lack of transparency of models. And we took steps to address that in the bulletin. And specifically, one of the things that certainly we've been seeing as we try to address the coverage gaps, we've got much greater use of predictive models. These are really advanced predictive models, and we called for insurers. We didn't tell insurers they couldn't use them. We want them to use them. We want the risk to be priced properly. We want the products to be available. But we called for insurers to have processes and procedures for designing, developing, verifying, deploying, using, updating, and monitoring predictive models, including a description of the methods used to detect and address errors, performance issues, outliers, or unfair discrimination in insurance practices resulting from the use of a model. And any risk management and internal controls should address data practices and accountability procedures, including data currency, lineage, quality, integrity, bias analysis and minimization, and suitability. Also, the bulletin calls for validating, testing, and retesting as necessary to assess the generalization of AI systems outputs upon implementation, and that includes the suitability of the data that was used to develop, to train, to validate, and to audit the model. Importantly, the bulletin indicates that an insurer can expect to be asked about its development, deployment, and use of any AI system or any specific predictive model, AI system or application, and its outcomes, including adverse consumer outcomes from the use of those AI systems, as well as any other information or documentation deemed relevant by the department. As of mid-March this year, 23 states have already adopted the bulletin. We've got 4 more that have adopted it pretty much in closed form, and it's still early to assess the long-term impact. But we know, and I can tell you from my response in my state, initial impact from insurers has been constructive and positive. They know what we want, they know what we expect, and we share, and I will say this is not a us against them, and it cannot be when we look at AI. This is a holistic process. We listen to consumers, we listen to the regulated entities, and we work together because we share the same goal. This industry prospers when we are able to provide as much protection as possible to as many people as possible, as affordably and efficiently as possible. And even though we've issued that guidance, it's not over. We keep listening. We hear from regulators, such as many here. We hear from industry, from consumer advocates, academics, tech providers, and others. And as AI evolves, so will our approach. And this input continues to shape our approach. Information is important to us as insurance regulators, which is natural because in insurance, information is a priority, good information. And so to deepen our understanding, the NAIC launched several comprehensive surveys examining the use of artificial intelligence and machine learning across personal auto, homeowners, life, and health insurance. And these detailed surveys provided valuable input into what was being done, how it was being done, and one thing we were concerned with, the degree of human oversight involved. And the other side is, how are consumers notified about the use of AI? Are consumers given the ability to correct their data? Do consumers know how companies govern that data internally? Now, if you take a look at the NAIC website, and I'll throw the ad out, naic.org, the info is out there and you can see the results. 92% of our health insurers reported using or planning to use AI in general, machine learning in particular. 88% of our auto insurers, 70% of our homeowners insurers, and 58% of our life insurers are here right now, are using or planning to use AI. And insurers most commonly use AI in claims, marketing, and fraud detection. All of that, the insurance industry is not necessarily the first mover, but a fast follower, and that's what we're seeing here. But there was a striking takeaway across all lines. Didn't matter which line of insurance we were looking at, and we found out that up to half or more of AI systems are sourced from third parties, not developed in-house. So what we've done is we've conducted follow-up interviews so that we are prepared to ask better, more focused questions. And the issue with a third party led us as regulators to focus more on those third-party AI systems. Our survey results show that many insurers rely heavily on external vendors for both models and data. That's why we created a third-party data and models working group that has been working to develop a clear, balanced regulatory approach. And the core concern for us is that we need to ensure that these third-party tools comply with insurance laws, particularly in rating, claims, and settlements, and do not introduce bias, unfair discrimination, or other consumer harms. And we want to do this right. One of the things we're doing is looking at the basic taxonomy. We're currently surveying state regulators to understand where the biggest concerns lie and determining, and this may seem simple, how to define a third party in this context. It's deceptively simple, but it is a critically important question to us. We need, and we are working to clarify lines of responsibility between insurers and those third-party vendors, especially when it comes to AI. We want to create accountability and transparency mechanism because we believe those are essential to ensuring that all parties understand their roles and obligations. In some cases, this may require adapting existing frameworks, or we may have to move to new frameworks to more effectively oversee third-party AI systems and their impact on insurance outcomes. Several states are taking the lead with various approaches. Connecticut, my home state, requires separate filings for complex models and is developing a predictive modeling database to improve regulatory oversight. We're working our data scientists overtime on that one. Texas has issued a bulletin reaffirming that insurers remain responsible for the actions and data of their third-party providers. And Maine is treating certain third-party vendors as advisory organizations, much as we do rating agencies when appropriate, bringing them under existing regulatory structures. Colorado has adopted a trust but verify approach, mandating quantitative testing of predictive models to ensure that they perform as intended, they do not produce unfair outcomes, and we hope to build on the state leadership by developing a national framework that provides clarity, consistency, and flexibility. And throughout this work, our guiding principles remain clear. We aim to protect consumers, support responsible innovation, provide clarity for the industry, enable efficient oversight, and ensure that our regulatory systems can adapt to future technologies. And we understand as well that for any of this to succeed, we as regulators must understand what we're doing. We have to have the right tools and training, and that's why we're working at the NAIC to develop new foundational training aimed at helping examiners to ask the right AI questions during market conduct exams and other oversight activities. Yeah, there's an awful lot more going on, but I'm running out of time, and what I want to do, I think I would be remiss if I did not stress the fact, being here in Morocco, we are continuing our engagement on these important issues with our international colleague, the EU-US Insurance Dialogue, for instance, which is a long-running partnership with us, our federal colleagues, our colleagues in Europe, and there, technology and innovation, including big data, AI, and SupTech as a regulatory tool is one of the key topics of discussion. We'll be discussing this in Albania at the IIS meeting. We're active in the IIS FinTech Forum, the OECD, and other international fora because we realize that as U.S. state insurance regulators, we provide a stable, credible, and reliable presence and voice on these issues and must continue to do so, which is why we're here. Your insights and collaboration are shaping an approach to innovation. And when I say your, I mean all of us. That approach to innovation that is not only, and we've heard this term a number of times today, it's important, it's forward-looking. It will be grounded in the principles of fairness, transparency, and accountability. But yes, it is forward-looking. And if you will, I'm going to take a point of personal privilege here just to extend my heartfelt thanks to the organizers, our colleagues at ACAPS who have hosted us so graciously, and to all of you who have gathered here for this important event. The depth of expertise and the spirit of collaboration in this room are truly inspiring, and it reminds me that while our regulatory systems or our role in the industries may differ, our goals are still shared: to foster innovation, to protect consumers, and to strengthen the resilience of our global insurance markets. May we always be able to work together to do so. Thank you.
Thank you so much. Thank you, Commissioner Mais, for this keynote speech, sharing your thoughts about this important topic. And now we're going to host Petra Hilkeman, who is chairperson of European Insurance and Occupational Pensions Authority. Welcome.
Yes. Mesdames et messieurs, c'est un plaisir d'être parmi vous aujourd'hui à Rendez-vous de Casablanca de l'assurance. C'est une bonne occasion pour nous tous d'en prendre davantage sur le point de vue d'autres, de partager des idées sur la direction que prend notre industrie de point de vue technologique. Je tiens à remercier la Fédération marocaine de l'assurance et tout particulièrement M. Ben Salah et Bachir, merci beaucoup pour l'invitation. De plus, j'ai plaisir à voir mes collègues superviseurs, Othman El Alami et Siam. Bien que j'aimerais beaucoup en discuter avec vous en français, je n'en suis pas encore la compétence. Et c'est pour ça je fais donc maintenant passer à l'anglais et je voudrais remercier la traducteur de m'avoir traduit. And with that, I will switch to English. I'm not sure if I promise to do everything in French next year, but I can say I would like to. It's the most beautiful language in the world. But in English then, on AI, the digital revolution, it is underway. We did an assessment last year in EU. We asked insurers, are you using AI? And 80% of non-life is either using it or planning to use it in the next 2 years. And for non-life, it's a little bit lower. So it's the other way around. So in non-life is using it 80%. And for life, we see 30%, but moving up to 50% in the next 2 years. So AI is used in EU. Also, AI is used not only anymore in the back office for efficiency, but it's moving to the front office, serving consumers. And discussing that and hearing also from you in Morocco and in Africa what is happening is good. Morocco is placing a growing emphasis on innovation, and you're taking a lead in driving the sector and the regional progress in this field. And I think seeing who is here again this year shows that, and congratulations on that. I received very good feedback as well from my colleagues who attended the BIMA Lab Africa InsurTech Summit in Rabat in November last year. I think technology is really here, and there's so much opportunity. You're very right in doing so. Insurers in Africa face many of the same challenges, conditions as insurers across the world. High interest rates, volatility, surge in natural disasters, rising fraud, and insurance penetration still can be low. But with new technologies and AI continuing to advance, they can actually transfer the insurance landscape. They can give you the opportunity to leapfrog. So here, I would really encourage you to keep this conversation, and we can learn from that as well. Now, when it comes to Europe, we also want to harness the potential of AI in Europe. We're determined to pioneer a secure, sustainable, equitable version of new technologies and AI for businesses and citizens alike. Our conviction is that the objective can only be achieved when innovation and regulation are in balance. And my colleague this morning, Otman Al-Alami, also said that. He said that balance is going to be essential. In my speech today, I want to share on how we try to do that, how EIOPA views that balance could be, because we see the benefits of AI as an area, but we also see it as an area where careful supervision will be needed. Now, let me start with the great potential of AI. We increasingly use wearable devices, measure our health, drive cars with GPS tracking, we live in homes with smart features, we use social media to log every aspect of our lives. All this generates data that can potentially be leveraged by insurers, among others. AI is the latest addition to the mix of technology that can do it, and it has the potential to really fundamentally shake up how we do it. Artificial intelligence can lead to faster claims handling, and we see that in our consumer protection report that we published in January, where a majority of consumers indicates that they much appreciate how AI actually supports claims handling and makes it go faster. It can also help fraud detection, and if you go to InsurTech conference, you see more and more tools developing on helping to do claims handling with the proper fraud detection in place to also make sure that insurers do not pay out claims when they shouldn't. We see a development of more accurate risk assessment, and we see more personalized products. And the efficiency gains can be significant. And it's therefore no surprise that we are seeing an increasing adoption of this technology across the value chain. Now, I'm not going to further underline the possibilities that digitalization and artificial intelligence hold. I'm now going to something equally important, that innovation can come at a cost if you do it unrestricted. It's the cost of eroding trust. And when trust leaves, it's difficult to restore. It will take years, if not decades. As we have seen, coming from a market, and my original is the Dutch market, the Netherlands, where a mis-selling scheme resulted in a big outcry about insurance over 15 years ago. but it still has an impact on how people feel about insurance. So misuse of AI or wrong outcomes of AI that burn trust will for sure set us back in the use of new technologies. And that is why it has to go hand in hand. In our consumer trend report that I already referred to highlights not only that the benefits are there, but also that many consumers see also the drawbacks of the use of AI. And some of these are related to the limited consideration of consumer-specific circumstances or by excessive standardization of settlement procedures. Regarding pricing and underwriting, while national authorities in Europe have reported benefits, such as more precise segmentation and price optimization, sometimes even more inclusion, lower costs, and therefore an increase of insurability, they're also concerned that AI can propose higher premiums or reduce access to insurance. And in fact, both can really happen. So data privacy, security, and ethical use is another concern, and it's mentioned by the previous speakers. The amount of data collected and shared with third parties is increasing. The more sensitive the data, the greater the risk that you need to manage. And we see that 24% of EU consumers indicated that they do not trust insurers to collect and use their personal data in an ethical way. Here we realize that the trust element really is real, and this is what we need to work on. So we need to make sure that AI solutions are a force of good. It means that rather driving a wedge between people, they should bring inclusiveness and economic opportunity. Rather than perpetuating biases, they should treat people fairly, regardless of any orientation, race, religion, age, or socioeconomic status. Rather than concentrating power and wealth in the hands of a few, AI should help bridge economic divides by fostering innovation that benefits small businesses and local communities. Rather than fueling misinformation and eroding trust, AI should enhance transparency and democratize access to reliable information and just processes. So the rules that the EU has set into place build on this path to achieve responsible, consumer-centric innovation. For if consumers do not trust AI-driven products and companies behind them, then all progress will be in vain. And this is exactly why European policymakers and regulators have been working to find the right balance between innovation and regulation. And here I want to say a bit about those pieces of legislation, starting from the foundation on which EIOPA builds its digital strategy. Innovation needs to be consumer-centric, that's one leg. The other leg is it needs to be rooted firmly and then flexible to grow. Now, starting with the AI Act. What does the AI Act now bring exactly into Europe? Now, the AI Act is the world's first horizontal legislation that governs the development, introduction, and use of AI systems in a standalone legal act. And we call this a horizontal act because it concerns all AI cases, regardless whether they are used in the financial sector or any other sector. And this is important to keep in mind. The AI Act refers to use of any AI in the European Union throughout the entire economy. And actually also throughout public administration. So also the AI that EIOPA is using will fall under the AI Act. And we don't make any differences there. Now what it does then, it says we have four categories. We have four categories of AI. One is AIs that bring unacceptable risk, and those are prohibited. Those AI systems are prohibited. And then we have high risk, we have limited risk, and minimal or no risks. Let's start with the top category. These are unacceptable risks implemented in these AI systems, and therefore these AI systems will be prohibited in the EU. They include social scoring, exploitative or manipulative systems. They're out. Then the high-risk systems. What does the high-risk systems mean, and particularly means for insurance? Well, the AI Act establishes that for this category, robust risk management methods need to be in place. High data quality standards need to be in place. Data governance and record-keeping practices need to be in place. I hope really that this sounds familiar to you, that you say, I also had to do this already for my financial regulator. And this is exactly the case. A lot of what is in the AI Act is relevant for the entire industry using AI systems, but it is something that already insurers had to do under Solvency II. So an insurer that tells me that because of the AI Act, everything now has to change, does have me a little bit worried, because what was then happening before under Solvency II. Now, what of insurance in Europe is under the AI Act? It's just a limited scope. It's the health and life insurers. They are considered to have AI systems that are high risk, and therefore they fall under the scope of the AI Act. All the other use of AI by insurers falls in the medium or very low category. So that means all the other lines of businesses, as well as any chatbot that may be used. Now, what is relevant here is how we're going to supervise that. This is also a challenge for our supervisors, because on the one hand, they have the Solvency II that applies to all the industry, and it goes, what I just said, good record keeping, good data quality, good use of data, no discrimination, fair use, etc. And then we have the AI Act that in particular for life and health asks the same. Now, in recent clarification from the European Commission, where we really have a firm role as IOPA in a discussion with the AI board, and where we discuss the scope of the definition of AI, we are now at a point that we can suggest that mathematical optimization methods and traditional statistical models that insurers have been using already for a long time may be excluded from the scope of the AI Act. And as IOPA, we think that makes sense. Because these, in our opinion, are not the AI systems that we actually are looking for to further have under an AI Act. I think it is business as usual for insurers, and we are supervising them under Solvency II. Now, what is important is that AI users, in any case, need to ensure AI literacy among their staff and inform consumers that they are interacting with AI systems. That is also in the AI Act. But indeed, even before the AI Act was adopted, for the use of AI in insurance did not take place in an unregulated place, and that is important to keep in mind. For insurers, this means that all the relevant provisions under Solvency II, as well as IDD, that's conduct supervision, remain fully in force, including the requirements to act in the best interest of consumers and to put in place an effective system of governance that provides sound and prudent management of the business. What also stays in place, of course, I would say, is the principle of proportionality, which is core to the European insurance framework, and of course also applies to the use of AI and the supervision of the use of AI in insurance companies. Now, how we do that as supervisors, we just published an opinion on the use of AI as IOPA, and here we try to be transparent on how we will approach this. With its differentiated and targeted approach, the AI Act does set a foundation for a responsible uptake of AI in Europe. It prescribes robust standards and application that carry high risks while easing the adoption of novel technologies for tasks that are the least likely to harm consumers. So again, it's firmly rooted, but it allows for flexibility to develop. Now, there's more than just the AI Act, and Europe is more than the AI Act. The AI Act is of course combined with other regulations. So there's the GDPR, the protection of data and personal data, which is very important. And also it's combined with the resilience that is brought by the Digital Operational Resilience Act that we also implemented. And while we are on this, the Commission just announced another 20 billion euros to finance the establishment of AI factories that can bring super computing capacity and reliable data and bring that further in an effort to enhance the use of AI across the EU. Now, as innovation moves forward and data plays a crucial role in the digital economy, we also need to talk about open finance. And open finance comes in EU via VIDA. That's the Act on the Financial Data Act. Open finance is a crucial part of the strategy of the EU because it enables data sharing, first of all, but it also protects consumers who are sharing those data. It promotes data-driven innovation and it promotes competition. While the increased availability of consumer data facilitated by open finance is expected indeed to lead to more and more tailored risk assessments for policyholders, better products, better services, we also need to keep in mind that it does not come without risk. And to support the development of open finance while ensuring a safe and trustworthy framework, there is now the VIDA Act regulation that is negotiated, but these negotiations, I think, need to be taken very seriously. For we need to recognize that with open finance also comes a cost to open up data. There comes a responsibility to know where those data end up and how they will be used. It comes with time that is necessary to implement it appropriately. And in the end, it should really lead to open, fair, and safe data-driven innovation that supports consumers. So that discussion is on the wagon. Let's see how it goes. And there's two more pieces of legislation, the Data Act and the Data Governance Act, that are already in place. I think not that much of an impact on the insurers in the sense that insurers already were regulated under Solvency II, where a lot of the considerations that you need to have in place when you want to do a proper job using people's data were already in force before we got these acts. Now, how does that then relate to what we're doing at the international level? I'm very happy that Andy already spoke to that. We must acknowledge, of course, that digitalization is a global phenomenon and that our efforts to harness the potential of technology, but also mitigate the risk, is an effort we can not only do jointly, but I think we can do it quicker jointly, we can learn from it jointly. And again, I appreciate very much that that is the topic of today's conference. This is where we can, as an industry and insurers, and supervisors, because this is definitely something we need to do jointly, where we can really leverage on each other's knowledge and bring this further. And that is why I'm very happy that in the context of the IAIS in the FinTech Forum, and I'm very proud to chair that we have a good dialogue on what we need. And again, I don't think you will hear us say that we think we need a lot of additional regulation. We think the principles that we have and the ICPs of IAS are there principle-based to serve the purpose of good supervision. But the question is, of course, and how do we do that with new technology? And this is the discussion we're having. It's a good discussion, and I fully agree with Andy that one of the topics we need to look at is third-party AI systems. How do we supervise them? Is that outsourcing? Is that an internal model? And then it's really, really helpful that you have other colleagues who are looking at the same question that can work with us. But I'm also sharing this with you. You must be looking at it as well. And I think any good ideas are welcome. Also on AI itself, the IAS is currently finalizing an application paper on both on AI as well as on digital operational resilience. And so you see that both on the resilience side as the use of AI, we're trying to come out with some additional ideas, application guidance that can help supervisors around the world in their thinking on how they want to supervise new technology while at the same time not hinder it to thrive. We're convinced that this cooperation can truly unlock the full potential of digitalization and create a safer and more innovative and more resilient industry with good supervision as a result. So to conclude, as we discussed, the adoption of digital tools and technology has the potential significantly to transform the way we know the insurance industry today. enabling insurers to make better informed decisions, respond more quickly to emerging risks, provide better protection to consumers, provide more protection to consumers, include more consumers. From data analytics and AI to automated reporting and compliance monitoring, the opportunities for digitalization to drive innovation and improvement in the insurance industry are significant, and not only in the industry, also in the supervisors. We all need innovation in Europe, in Africa, in the United States, and in China. Our objective, and Asia, sorry. Our objective in Europe is for innovation to be responsible and respectful with the core principles and values that we have all collectively built, with enough space for businesses to flourish and sufficiently safeguards for consumers and financial stability to be protected. And I think you can already hear that what I said that, but also the other supervisors were saying that. So I think that we are pretty harmonized on the goal. It's my sincere hope that in order to achieve that goal, we continue today with a constructive dialogue. Again, I'm impressed, like last year, with how many people are here, how much is happening. I'm learning a lot, and I thank you very much for having me today, and I look forward to further discussions. Thank you very much. Merci.
Thank you so much. Okay. Thank you very much for sharing your ideas and practices and thoughts. That shows that this event provides real thought leadership to all the industry and beyond.